Today is April 21, 1:22 p.m. We saw unusual options on Coinbase. That's COIN, the cryptocurrency exchange platform. And keep in mind, earnings is coming up. That's on May 4. And these options, they do actually expire before that, so it may not be an earnings prediction. So as usual, let's take a look at those unusual options. So April 28 was the date. That's before earnings, as I mentioned. This was done at 12:49 p.m. and 1:04. So that's actually just about 20 minutes ago. So make sure you hit the bell icon for notifications if you want to see these unusual options right away and when we upload these videos. These options, you'll notice, is this 46.5 strike puts. And the other thing to also keep in mind is that they're actually buying these. They're pretty cheap. They're $25 each or $26 each, and they're doing that. And also at that same time at 12:49, they were actually also let me show you. They're also closing some positions off at 12:49. You'll see here. Let's scroll all the way down to that time period. Okay, so over here, we can see here that they actually, at this 12:49:44 second mark, you'll see this purchase here, but you'll also see this 61 strike puts, right? These are closing orders, we believe. They are closing this. They could be selling this put for this amount of credit, using some of this to buy that put. Okay. And also the other thing that, well, let's go down to that 104.54 and see if there was something also happening also at that large interval, right? We also saw that 104. At 104, we saw also a bunch of those puts being bought, right? The 46, you see a lot of these 46.5 strike puts being bought here. You see that here. Here we are. That 4,900 of them. So this one did not have that closing order. Okay, and how do we know? Well, we'll take a look at that options chain now. So on the April 28th, you'll see here that 46.5 here strike. You'll see that 18,000 volume, lots of volume here, much greater than the open interest of 106. So we know these are open orders. So keep in mind, delta is very low, so it's quite a low probability that it will happen. But it is quite unusual to be getting lots of these contracts just 7 days away, right? Okay, so we are also in that position as well. Seems very unusual. The 61 puts are over here. And the reason why we know they closed it, or at least have a higher likelihood that they closed it, is because the volume here is less than the open interest here. And so, yeah, it would make sense that they sold this put too, because it is at the money, close to at the money, and that is the ideal time to sell options. So it is a good time to do that. So we will be watching this to see if they had sold this put to open it, and then they just bought those as a hedge, so it's possible they had, for example, if they were to sell this and then they bought let's say they bought some of these with that credit, they bought some of these puts. When you analyze that trade, let's turn all that off. It's actually it could actually be a still a bullish trade, right? So it's still above that zero line. So depending on how many puts you bought, right, for this. So if you start buying more and more and more, then they're basically using that put to hedge their upside here. So there's not going to be a loss for them. If this price does rally and go up, they're not going to lose any money, and they're just buying more of these puts to create a hedge that may happen for their trade in these 7 days. So we're going to be monitoring this. Make sure you're subscribed so we can let everybody know if they were actually open orders instead of closing orders. We're going to assume that they're closing orders at this time, and that they're just buying straight puts, and those are closing orders. But in case they were opening orders, it would tell us that a slightly different story, right? That they are just taking advantage of the volatility at that time and hedging their bets on the downside in case Coinbase crashes in this, kind of goes below 46.5. 46.5 is around here, right? It was actually kind of a support level around here. Looks like this is around over here. 46.5 is around here. And keep in mind, volatility will increase as we approach the earnings date. And that could also be why they bought all these puts, because they're expecting them to increase in volatility. Currently, the volatility is about 27%, historically just 8%, not so high. And so by having a lot of these puts that they got, right? So they got, let's say you have 5,000 of them, right? Here's 5,099 of them. That was, I think, the unusual volume that we saw here. Yeah, this 5,099 of them. So if they had gotten this and just bought it, then their volatility is very high at about 4,000, right? 3,900. So volatility will be increasing for sure before earnings. So that may also be why they put this trade on. It's just to buy a lot of this volatility, and then before earnings, this will expire and it will still be profitable because of the increase in volatility that is expected to increase as we head into earnings in 7 days. So keep that also in mind, that could be one of the reasons why there's a lot of these put buying. It does not necessarily mean that they think it's going to have to drop below 46.5, because let's take a look at it again. If this volatility here just increases, let's say we're sitting here at a minus, if we were to increase that, let's say 20% in volatility, this now becomes a positive. You'll see here the price, this purple line actually shifts up more whenever volatility increases, because this is a positive Vega trade. Okay, so always keep in mind when you're trading earnings that you have to work with the volatility adjustments here to anticipate the changes around earnings. Okay, and so that's what we think is also happening. Okay, so that's our analysis on Coinbase. I hope you've learned something. If you did, please smash that like button, comment below with any of your thoughts, questions, and good luck trading. Take care, everybody.